I'm sat here with an 8-figure trader, Antonio. We're gonna hop into the charts and see exactly how he approaches the market on a daily basis. All right, let's swap seats. You can hop in the hot chair and we'll go through some charts. Okay, cool. Yeah, so we're gonna hop into the charts here, see if there's any opportunity. How do you what's your basic understanding of the charts? What do you usually use? What are some tools you use?
So what I'm looking at every single day is in QNE as always. Although a lot of times I might trade options or I might trade futures, it depends on the day. I'm always looking at QNES. So first thing I hop on is I like to look at the pre-market action. Since right now it's Monday, like Sunday, I kind of already had a look for it. So the first thing I know if we have any weekly gaps, which we do right here. So the yellow dotted line, you can actually like turn it on in your trading view setting. It's in my previous day closing price. So I'll look if we had any gap ups or gap downs because they'll more than likely serve as a magnet for the market. Whether it might be a Monday or Tuesday, at some point more than likely we want to come back to that. So I'll know that. Well, we're nowhere near it, but I'll just keep it in mind until then.
You're only trading New York, right? Unless obviously you're more of a
I will trade sometimes in Asia, London. If there's a solid setup, let's say I'm doing some work like at 7 p.m. on my chart, on my computer, and then I'll have the charts open. If I see a setup, I will take it. And there will always be a futures trade. So that's usually when I'm trading my preferred account will be during only Asia, London. So I had an account with Alpha actually, which I think was probably like the most awesome account I ever had. It was a $100,000 standard account. And I only traded it during Asia, nothing else. And the account was, once I got it funded, it was $150 away from blowing it. And in that same account, I got $30,000 plus in payouts.
Wow.
From $150 blowing it, I was like, you know what? Still gonna keep trading it the way I trade. Brought it all the way back, $30,000 to $35,000 in payouts off that one single 100K account. And it was trading Asia. So obviously I will mark my all-time highs. We just broke all-time highs today. We had a really strong move up during Asia London. I really like when we get this right off the open, these big manipulation candles. So as you can see here with a stack of a bunch of equal highs right before the market opened. And then we get like a big move up and then a big move down. So I would have probably flipped out. So this is my Fibonacci tool. And I was telling you a little bit before, I don't know if they'll see in the video, but this is my one of the main strategies I use, which is a retracement into my golden pocket, which is the 0.618 to 0.66. And especially if that happens with a manipulation move. So here we had a bunch of equal highs, big move up, we rejected golden pocket, big move down. I would probably find a 1 minute entry somewhere in here. Now this trade is gone, but I would probably been at 9:30, like the trade I would have loved to hop into. But the way I trade is I try to trade reversals, but reversals after a confirmation. So you see we got this move up. I'm not trying to top take the market. I'm not trying to catch the exact top. I'm gonna find a solid confirmation, which will come with off of my golden pocket with low risk. So for example, if I take in this trade, just to show an example, I probably would enter somewhere in here. I would have kept my stop above the GP, 1 to 2R. You know, whether this slows down here, but being a solid target. When I'm looking for profit targets, I'm looking for lows to get taken out.
Yep.
Especially if I'm trading against the trend. Another rule that I have is if I take out a low, I'm never shorting. So, which doesn't really make sense for a lot of people. And when we take out a high, I never long.
Okay.
So above a high, I'm always shorting, and below a low, I'm always longing.
Okay.
So an example of this, like here we had all these highs. Above this, I'm only looking for shorts. I'm not looking for longs. I'm looking for the latest liquidity to get taken out. The liquidity comes in form of highs and lows. And when that gets taken out, I'm looking for the opposite trade.
So basically you're always shorting above old highs and longing below
yes,
lows.
I think it's pretty much essentially the opposite of trading breakouts.
Sure.
Well, people are like, hey, we just make a new high, let me long. And that's actually how I started my career trading, is like breakouts, and I just found zero success. And I was like, how can I reverse engineer that? Like, I'm keep getting clapped. Let me find a way to trade the opposite.
Yeah. So
then on one of my confirmation I look for is like, I just have to have taken out a high. And if you have no liquidity, then you're more than likely just getting a V-shaped reversal anyway. So let's say we had no highs. We'll draw a little example. Let's say we didn't have a high and we just had to move down. If we had just tried to move down and then we start retracing like this, I'm not gonna short any of this because we had no liquidity there. So a lot of times it will be a V-shaped reversal right there. And that's when you find those big V-shaped reversals, which I like to trade as well whenever we can. I'll also like to pull up ES, see if we got an SMT there, the divergence between the two.
So since these assets are trading at all-time highs right now, does that have any relevance to you? Like, are you only going to be looking for longs or only looking for shorts?
I don't, and I don't. Like a lot of people are like, hey, if we're trading all-time highs, it sucks. And the truth of the matter is, most of your trading career will always be at all-time highs. Like 80% of your trading career will be all-time highs. Why? Because the markets always go up. So you have to find a way to adjust. You have to find the strategies that work when you're breaking all-time highs. And I think we make a lot of excuses for our strategies lacking, like having flaws, and we're like, we want to blame it on the price action. We want to blame it on the all-time highs versus being like, hey, maybe I gotta work on something. Hey, maybe I'm missing things in there that I should be looking for, you know? So I don't buy that. Now, if we're making new all-time highs, I'm not looking at short. So if I find a proper reversal, a proper continuation move, if I miss the first leg, there'll be a retracement catching the second leg, or there'll be another one, I'll catch the third, I'll catch the last move down. I don't care to catch the whole move. And I think that came along with like my experience now into trading. That's like, I realized I literally I cannot bottom and top take every single time. It's so difficult. And no one does that. Like you'll see on a highlight on a TikTok or something like that. You know, it'll happen here and there, you'll catch it, but it's more luck than anything else. So I'm just here trying to catch a solid move. Does it fit my system? Yes or no? Is it green or red? I don't even care. Another mindset I have is like, I'm going to the trades, I'm going to the charts, like I'm not even looking to take a trade. I go into the charts, I'm like, I'm not even trading today. Like I'll look at them, but like I'm not looking to, like I'm not there to have fun and trade.
Yeah.
And then I'll see something like, oh wow, this is a really good setup, let me take it. Like I'll let the market change my mind so that I'm not like trying to FOMO into trade, I'm not trying to over risk, I'm not chasing. You know, a lot of people are like, oh my God, look at ES, it's having a big red candle down. I don't have those emotions of feeling anymore because I was able to, with the experience, kind of like master. It's kind of like when you go to the gym and you get calluses in your hands. I feel like your emotions are like that.
Yeah. Like
with FOMO, you get calluses. Like, you've seen it so many times, you miss so many moves that you realize like that move never mattered because there is another one.
Yeah, do you feel like a big mistake the common trader make is showing up to the charts and expecting to take a trade every day?
Big time. They're expecting the market to be like, hey, they're gonna give me, like the market doesn't owe you anything, it doesn't owe me anything, they're gonna do their own thing. Now, if it gives you that trade, take it and take advantage of it as much as you can, but don't go into it, it's like, I have to trade today. Because the market is always there. I've missed so many moves. I've missed more moves than I catch. But then you realize, hey, there's another move tomorrow, and then like, I'm 10 years in, and I'm like, every single day there was a move. And every single day that I felt that FOMO, there was a bigger move the next day, or the day after, the week after, realizing that's like, it doesn't matter. There's always be something. You'll catch that big move. Like, I'll catch that big move. I might not catch it every day, but I know it'll come to me. And again, if I just focus on the process, that big move, that big payout, it'll just come to you. Like, you literally has to. There's no way around it.
I like that.
One thing I'm noting is ES selling off a lot harder than in Q. Again, we have that weekly gap that we marked on in Q. We also have it on ES. I think the reason why in Q is holding up so well, AMD had some really big news where they gapped up 25%. The chip company, they're partnering with OpenAI, which is obviously like the owners of ChatGPT. So now I'm looking for like, there's a pretty big divergence between the markets. So we could potentially look for some longs. It's still a little early. I would need to wait for some confirmations, but yes, it's coming to fill this weekly opening gap, and then Q's leaving it way behind. So we have really big divergences. For example, here we just took out this low way down here, and Q's still holding it up. So for now, I probably wouldn't want to look for shorts on NQ. Now, if I'd caught this early move, I probably would have still been holding in shorts and tried to run it down, try to catch the momentum down. But when we have a huge divergence between two assets, I stop looking for continuation down at this point.
Okay.
I do also tend to look at YM. I don't always have it on the charts, but it is something I will note, because especially if you're looking at ES, you have to understand that ES, almost halfway, like 40-35% is the YM as well. So you do have to keep a note. And obviously if it's selling off this hard, like it's just nuking off the open, we needed to look for a bounce for ES to kind of pick up a little bit and then see if we can catch this reversal.
So let's just say you're focusing on NQ for the day. You like to use these other assets to kind of aid your analysis?
Yeah, so the way I look at it is like, so you have all your confluences, right? We'll have like a fair value gap, a divergence, the golden pocket. The way I look at it is like, I want all of them to click together, like when I'm seeing all my confluences together like a puzzle, then I take my trade.
Okay.
So I want to fill my puzzle, which is all these confluences, and then I'll take my trade.
Okay.
This shorted open would have been even nicer, because you can see Friday here, ES did not take out all-time highs, while NQ did. And again, this was kind of towards the 8 a.m. Going to the New York session. So the short was actually a pretty nice short.
The short NQ off the open?
Yeah, NQ off the opening, also yes, either one. Now yes tapped that weekly opening gap, and then we're getting a bounce. We need to see a little bit more though. I would also like to mark out, I'm gonna mark out Friday's low to the pre-market high, and you can see we also have a golden pocket there, again a GP tool. Just go on your charts, mark out key lows and key highs. It's a tool that not a lot of people use. There's different ways to look at golden pocket, but I will say like almost always gives you some kind of move.
Nice.
Even if it's like a 10, 20, 30 point move, you always see it getting respected.
What kind of confirmations would you look like? If you wanted to, is S&P an asset you ideally looking for some sort of longs now?
I rarely trade S&P. I will trade it sometimes, but I rarely look at it first. So I'm gonna look for, so here, first of all, we need to get a low. And Q just took out this recent low right here on the 1 minute chart, and they did it in like a pretty nice candle with like a long wick up. We have the divergence, so boom, that's my two confluences there. Yes, just hit the golden pocket, boom, that's my third confluences right there. I'm looking for usually 5 to take a trade. So now, those are my confluences that a reversal could be happening. Now I need a confluence of like me getting into a trade. Okay, what's gonna trigger my entry? What I would like to see some displacement of. The displacement could be a fair value gap. You come retest that. Even if it lines up with a golden pocket, even better, I might take that trade. I will look at some inversion fair value gaps. We don't have any, like this whole move down that we had right off the open. We only had like one little fair value gap here, so we'll test it out.
Okay.
Or a more quote-unquote riskier entry that I might look for is if we come back all the way to this 220 and we close above the golden pocket, invalidating it, look for the move to a new all-time high, which is not a huge move, but I do think we can get some continuation above it for like 30, 40 points. I'm not scared of longing into all-time highs because I know more often than not an all-time high break usually leads to continuation. It's actually, there's the statistics out there. The longing all-time highs, like when you break any all-time highs, is actually a really good strategy. A lot of people are like, oh, why would you long? You're gonna short it. But like, again, just the way the market moves, it tends to go higher. Longing all-time highs tend to be a decent strategy.
As for targets and stuff like that, a lot of people like to use specific like risk to rewards, like a 1 to 3, or do you like to target specific RRs, or is it like more of like a high or low you're looking for?
No, I'm usually looking for the charts. I want everything. So think about this: when you're looking at a trade, it's an equation you're doing, right? Like you go back to school, y equals mx plus b. But if you add a component to that equation that has no relevance to anything else, like what does the market know that Antonio just hit a 1 to 2 hour? Oh, I'm gonna reverse here, right? Like there's no actual like there's nothing behind. There's no substance behind.
You let the chart tell you.
I let the charts do that. Now
I like that.
When you're breaking all-time highs, it can be tricky because you're like, okay, what am I looking for? So I'm usually looking at versus taking profits, just trailing it up. So my last level that's like, hey, I'm in a long. Where is my last level that should be retested? Then my trade is still valid. I'm just trailing it up and trying to grind it up. I try to hold my trades. I try to catch a bigger move versus like just scalp in and out. This is the way I always trade it and the way that I like. But that's usually how I go about it. Now, if you're like, 100 points in profit and you're like really happy, like, take it, whatever, if it makes you feel better. But I try to do everything that I can simply on the charts, minimize my emotions as much as possible. Now, not to say I don't have emotions, I feel the same emotions everybody feels. It's just that I feel like I have pretty strong calluses for my emotions. That's like I can handle them a lot better.
You have the experience under the belt, right?
Yeah, I see it as a bell curve. Like, let's say you draw a bell curve. 80% of the time, it's gonna be like in that middle part. It's like you're not feeling angry, you're not feeling extremely happy, and 20% of the days, maybe you'll feel like those extreme emotions. Whether you're like upset, you're going on tilt, or you're really happy because you just hit an insane trade. And I tell people, like, I don't get happy when you hit a trade. It's so funny to me, like, oh, I just hit this insane trade, doubles in the channel that people do. I'm like, you entered that trade. I hope you were gonna be green. Like, why would you enter a trade without the expectation of that trade hitting? So when a trade hits, I'm like, yeah, that's what I was expecting. Why I'm gonna be extremely happy? So if I'm extremely happy, it means that I probably didn't have faith in my trading setup. Right? So that's what I tell people. And then if you're angry about it, like you say your trade hit stop loss, then it probably means that you were not okay with that risk. Because if I trade hit stop loss, I'll lose over a few thousand. Like, I'm okay with that. Like, you have to be like, it is what it is. I took the L. I'm moving on to the next trade. So yeah, here, like, in Q's been kind of like, we got that 930 move. It's chopping around. We did have some pretty big move Asia-London, which, a lot of times you get a big move Asia-London. And what the market wants to do, like, you only manipulate distribute. Right? So after distribution, so we got a big London and Asia distribution. What's gonna happen next? If we follow that cycle, accumulate. So I'll go into New York kind of like being a little more, not hesitant, but more selective with my setups. Because I'm expecting
more of like a rangy session.
Yeah, I'm expecting a rangy session, which seems kind of, it's been a trend this last couple of weeks. We've been getting a lot of New York sessions like that. But it's fine. You just, again, you wait for your setup, you stay patient. You only get these people, a lot of people like, Antonio, I'm getting destroyed in this chop recently, like, and it's because you can't sit through it. Like, you can't like look at the charts and be like, okay, I'm just gonna sit through it. I don't have to take a trade. But when you go in and it's like, I need to be in a trade, I need to pass my account, I need my, fifth day of $200. Then you start taking random trades that are not high quality setups, and you start making those mistakes.
I see.
That's why I go in the mindset, it's like, I don't have to take a trade as much as possible.
Next week, we spend a full day with Antonio. From a drive in his Porsche to a 1 versus 1 on the court,
It was to be expected.
to diving deeper into the mindset that built his journey.
So I was graduating community college and I had given day trading a chance. And I was like, do I go to college and invest $20,000 a semester, or do I quit for the year and just focus on trading? The very first day of university, I made $5,000, which was one of my biggest days at the time.
If you want to see what really shapes a trader outside the charts, you won't want to miss it. Follow us on Instagram to stay updated. See you in the next one.